But I think we've got the management of Mazagon with us.
Absolutely. And before we get to the management, let's pull up the stock price, because there's an interesting tug of war that's been taking place in the market since yesterday between the bulls and the bears on this stock. The stock started off a little soft. It's recovered quite well. Mazagon is actually down about 25% from the peak. And yesterday, the decline was a little more pronounced because of a note that was there in the market. ICICI Securities put out a report. The target price was substantially lower than where the stock is trading at right now. The target price is close to 1,100. And, there's a contention there by that one brokerage that perhaps as the execution of a lot of the large projects gets underway, after FY26, the surge in margins, the EPS, that will all sort of cool down. It will become range-bound. And then the stock will have to perhaps contend with valuations which perhaps could be out of whack. So just summing up that view, which led to a big decline on the stock yesterday. But we want to get an idea about the business ahead and whether any of these concerns are well-founded at all. Sanjeev Singhal, Chairman and MD of Mazagon Dock Shipbuilders, is with us. Mr. Singhal, thank you so much for joining in. So, of course, your business always gets a lot of attention and attraction in the listed markets. And we want to start off with exactly that. You had a fantastic first quarter. Your margins moved up to 27%. You've been delivering ahead of schedule on a lot of the marquee deals and the marquee names. But the concern is really that whether you will be executing most of your order book by FY26 and what happens after that. So let's start by getting the order book picture. Where do you stand? What is the addition? And how much will you grow the order book by this year? And what is the execution timeline?
Yeah, good morning, everybody. With respect to the company fundamentals, we would focus only on the fundamentals. As far as the order book is concerned, we have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. And apart from this, I have mentioned earlier also in a very transparent manner that we are poised to receive one more order with respect to additional 3 Scorpion submarines, for which costing committee has had 2 rounds of evaluations, and we believe that they are close to submission of their report. And subsequent to the submission of the costing committee report, there would be, if required, any technical or financial negotiations. And we expect this order to be placed on Mazagon Dock anytime soon. Apart from this, there is an order for P-75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazagon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. Apart from this, also,
sir, if you just allow us to interrupt you, sorry for that, just to understand the nuances. Some questions, one step at a time. You said the order book right now is 40,000 crores. That includes the delivery of 30 ships over the next couple of years. You will execute this order book over what period of time? And in terms of revenue recognition, what should we expect in FY25, FY26?
I'll not be assigning any numbers for FY25 right now, but yes, we are looking for growth over 23-24. And this order book, we plan to execute over a period of next around 4 years. And then there would be certain pendings with respect to the D448 liabilities and the warranty executions. So maybe 4.5 years, 5 years, this order book would be liquidated. But at the same time, we are expecting substantial orders in next... in a short while, I would say.
Okay, let's...
Maybe next 2 to 3 years. So before we execute the order book, the fresh orders should be in place.
Yeah, no, absolutely. Mr. Singhal, good morning. Prashant here. Yeah. And I mean, it's been such a wealth creator, the stock over the last couple of years. But we'll talk, of course, only about the business. So let's talk about that P-75I submarines, right? Six in total. You've submitted bids. You're saying that what you've submitted has been found to be satisfactory. I think you told us that the order value there is about 43,000 crores. By when can we...
the AON value as on 2018 is 43,000 crores.
Yeah, absolutely. By when will we see something this year, or you said the final award will only happen next year?
Yeah, we are expecting next year.
Next year, first half, second half?
Such fine timelines would be difficult to define because a lot of procedural issues are there, a lot of agencies are involved. These are mega projects. But yes, positive developments in the right directions are happening. So if things are moving as per schedule, then we expect sometime next year before December, order should be in place.
And how many, there is a private player in a JV also in the fray, right? What would your expectation be? You've submitted for all 6, but typically, how does this happen? I mean, if there are 2 players who submitted bids and both are found satisfactory,
As far as the RFP is concerned, the entire lot of 6 submarines will be awarded to only one of the consortiums. Mazagon Dock Shipbuilders, considering its strength, is very positive about it.
No, absolutely. Get that. Before we spoke about the submarines, you were talking, you started with another large value sort of bid.
For 3 submarines, just clarity on that, sir. So P751 is separate.
That is next year.
That's next year. You said that there is another large order for 3 submarines where technical studies are undergoing. Can you tell us more about this contract, the size, the potential, and by when perhaps we can get the final word on it?
Currently, we are executing P75, which comprises of 6 number of Scorpion submarines. We have delivered 5, and the 6th one is scheduled to be delivered by this year, probably by 3rd quarter of this year. And in a continuation of the same P75, there is an additional discussion with regard to 3 more submarines of P75, Scorpion submarines. So these 3 submarines, we have already submitted the technical as well as the financial documents to the ministry, and this has been evaluated by the costing committee twice. And we believe that the costing committee is close to finalizing their estimates and assessments. So this is likely to be finalized, and this could happen very soon if things go as per schedule. So this is on nomination basis and likely to happen very fast.
And this is and what's the value, sir?
A1 value would be something around 27,000 crores.
And that should happen. I mean, the award should happen this year. Over the next couple of months.
Yeah.
Okay. It's possible that by when we are speaking with you same time next year, of course, that's not the next conversation we'll have. We'll have hopefully many between. But you will have, that 43,000 crores and this additional, which is expected to be awarded in the next couple of months. I mean, we're looking at a sizable accretion, possible.
With respect to the first 3 submarines, we are absolutely positive that should definitely
that's nomination.
To that. With respect to P75I 6 submarines, I said we are hopeful by December next year, things should be in place.
Okay, things should be in place.
All right. So now that we've understood the way the order book is shaping up, just a word on revenue recognition, because I'm going back to market concerns and the concerns could be based on stock valuation, but just to understand the business mechanics, one of the contentions is that as you go on executing this order book, revenue recognition is based on certain milestones. So maybe the pace of revenue recognition will slow down. Maybe the margins will come off. I mean, you're at 27% in Q1 of FY25. So just tell us, as you execute these large orders, what is the revenue recognition and what happens to margins? Can you sustain 27%?
We have never said that whatever margins are there, these will continue as it is. It will depend upon the order profile. But yes, what I can say is that currently the position is reasonably comfortable. And because these projects, with respect to destroyers 15 Bravo, this is coming to a fag end. We are out of 4 destroyers, we have already delivered 3, and we are scheduled to deliver the 4th one also this year. So this project would be closing. So any cushions which are kept with respect to liabilities that may arise, the cost to completion, this is reworked on a quarterly basis and every year in a much elaborate and granular manner. So if any cost savings are there, they are released as profits. So this kind of a scenario would continue. Whenever a new project is there during the initial stages, normally the cost estimation is on a conservative side. It may not be absolutely accurate until the orders are formed up and placed. But as we progress into the project, a greater clarity emerges, and we are more aware with respect to at what cost we'll be able to complete. So revenue recognition in case of large projects normally happens in this way. So I don't see, I'm not saying that the margins at the rate of 27% are going to continue, but yes, I definitely see whatever projects we are participating in, a reasonably healthy margins are catered for.
So what is healthy, sir? What is a realistic expectation to have? Not 27%, you've clarified that, but what could be reasonable, sustainable on a full year basis on margins?
See, it would depend. We are a cash surplus company. There are no working capital concerns, and there are no liabilities in the form of debts or any loans. So, with respect to the investments, also there is a sizable accrual in the form of interest income. And as far as the projects are concerned, projects may reasonable margin would be something around 10 to 12%. And taking the repair verticals, the offshore projects, which we have now started in a significant manner, without assigning any numbers, I would say that anything about 10%, 12% would be a reasonably healthy margin.
The offshore project, you're referring to the ONGC one, right? So we're running out of time. But just to understand, I mean, the large chunk of the order book, obviously, it's all naval right now. Is there a conscious sort of effort to go beyond naval projects as well? Will we see more of these ONGC type projects? What's the what's the revenue mix that we can expect, say, 2 years down the line?
Yeah, definitely. MDL was in offshore business around 22 years back. So this is one vertical which we are now revisiting and reviving once again. So this would be a separate revenue stream in addition to the naval projects as well as the commercial ships. We are also looking at the repair and maintenance sector. Although these sectors, like repair and maintenance, we don't target more than 8 to 10% of our total revenue pie. And similarly, with respect to ONGC, of course, with respect to offshore, this can be a significant contributor to our revenues going down the line. Because we see a lot of potential in this, and there can be a long-term. We see a long-term engagement in this area.
Okay, and so just checking. I know you won't really tell us much on this, but in case you've heard anything, in New Delhi, anywhere around you, any talk of any stake sale by the government? Anything from DIPAM that you may have picked up in conversations?
That would depend upon DIPAM only. So whatever are the directors from the DIPAM side, we'll abide by that.
All right, Mr. Singhal, we'll leave it there. Thank you very much for your time. Appreciate you joining us and running us through all of that in a detailed fashion. That's Mazagon Dock with Perspective.